Welcome to another video. Let's get right into it. Hope you guys enjoy it. As always, I'm trying to give you guys almost daily updates. If you enjoyed, please leave a like and let's get started. So first of all, I think Bitcoin will experience a crash very soon. We've obviously gone up quite a bit to almost $98,000 right here, which aligns with what we've talked about previously, our target. And let's zoom into the current price. The target, first target being around about the current price, next target obviously being at the 200 simple moving average at around 106,000. So why do I think Bitcoin will go down? Well, we still have an active CME gap, and these CME gaps 95% of the time get filled eventually, rather sooner than later. We had a gap here at around 90.6 thousand, which was filled not too much after. It was filled, let me check actually, it was filled just about, here we go, just about 5-6 days after it was opened. Now we have the other gap here, which is at $88.2 thousand, and this was filled already 2 weeks ago, 14 days ago. So definitely I think we're gonna hit it eventually. Now before we hit it, we have the target here at 106,000, right? We mentioned it before, it's the 200 simple moving average line. And right now, the current target is 97,000. Now, why did I mention that target? Well, if I zoom out a bit here for Bitcoin, then we can see that when we look at the volume profile, we have a lot of volume at this price, meaning a lot of trading activity has gone on previously at this price range, which is obviously right here, right? There was a lot of trading going on there. So this means we will most likely either find support or resistance at this price and before continuing to go higher. Let me remove the volume profile again. So if we do go higher from here, of course, the next target is the 200 simple moving average, which currently is at around 106. So what I think could happen is either we first hit that target, and that's a good position to start selling some positions that you not managed to sell or take a short, or we first go down to fill that CME gap at around 88.2 thousand, touch this 200 simple moving average before going further down. Now, let's go back in history a bit, because something very interesting is playing out right now. If we go to 2022, right, we had the peak here at 69,000 in November 2022. And just after that, we have a very similar pattern, you can recognize it right here, as we have right now. We had this almost falling wedge, slightly falling wedge, and you can see we broke out of it, and then we touched the 200 simple moving average line before continuing to go down. And now if we go back to where we are today, it is pretty much a very similar situation right now. I mean, I can literally draw the same line. I can just make this a bit smaller, so we can draw pretty much the exact same line here, and you can see that the same thing is happening right now. We're breaking out of this triangle here and moving towards our 200 simple moving average target, which I think can happen. So like I said, either we go touch it, or we go fill the CME gap first and then touch it and then go down. But I do think we are going to go towards the 200 simple moving average, as we did last time in April 2022. Now, next up, we had some inflation data come out. The PPI, which is the producer price index, came out at 3%. The expectation was 2.7%. Now, the PPI is the cost that producers in the market have when they produce items, right? And when production costs go higher, these costs are then usually passed on to consumers. So it is an interesting measure to see. If production costs go higher, usually prices for the goods that they produce also go higher, while the inflation itself, the CPI, the consumer price index, which we had on Tuesday, it came out at 2.7%, which was the expectation. They were both 2.7%, so no change here. And I don't think Trump can really lower the interest rates much lower, because we obviously know he wants to lower the interest rates. If he does lower them too drastically, it could cause a recession. Soon as more money comes in the system and people borrow money for cheaper, so we have to really slowly, gradually reduce the interest rates to keep inflation at 2%, which is the target of the Federal Reserve. Now, finally, let's talk about silver. Now, silver has actually continued going up quite a bit. So if you look here at the daily, it just kept going up. We just reached $93 per ounce for silver. And if we look at the monthly, we can see that silver is pretty much forming a cup and handle pattern, right? Which is just this pattern, the cup, then we have the handle, and then a breakout from the handle, which is the breakout we are seeing here over the last few years actually. So this is on the monthly time frame, and we can see a massive cup and handle pattern, which I think once it breaks, we're gonna go down fairly soon. But until then, we are still going higher. So if you have bought silver, congrats to you. If you enjoyed the video, please leave a like and subscribe. It would help the channel tremendously. And with that being said, see you guys tomorrow. We know what to do, right? We know what's to do. All we have to do is wait. You might want to sell some positions here as we are in a crucial resistance area. And if we do go higher, I'm personally going to take some sells at around 106,000 before we then continue going down. Hope you guys liked it. See you next time. Bye.